If you woke up this morning and checked the silver market, you did not see a price quote. You saw a crime scene. At 11:47 p.m. Eastern Time on December 27th, while you were sleeping, the last major block of registered silver on the COMEX was claimed for physical delivery. 47.6 million ounces. Gone. In 4 trading days, 60% of the remaining registered inventory vanished from the vaults. And Bloomberg is not going to tell you this. CNBC is not going to tell you this. The Federal Reserve is definitely not going to tell you this. But I will. What I am about to show you is the smoking gun that proves the silver market has been the largest financial fraud of the modern era. And that fraud is now collapsing in real time. Before I continue, I need you to do something right now, not later. Not when the video ends. Now, hit the like button. Not because I am asking nicely, but because the algorithm is actively suppressing this video as I speak. YouTube does not want this information on the front page. The only way to force this information into the public feed is if you boost the signal. The like button is not a compliment, it is a weapon against censorship. Hit it now. And if you're not subscribed, subscribe with notifications on. Because when the next bomb drops, you need to know before everyone else. Now let me show you what is actually happening in the silver market, because what you are seeing on your screen when you check the price is a fantasy. A carefully constructed illusion designed to hide the single largest theft of real assets in financial history. To understand what happened last month, we need to go back to 1971. That was the year Richard Nixon closed the gold window and disconnected the dollar from any physical backing. What most people do not know is that this was not just about gold. It was about creating a system where prices could be set by paper contracts rather than physical reality. The COMEX Futures Exchange became the mechanism. Banks could create unlimited contracts to sell metals they did not possess. And for 50 years, this system worked, because almost nobody ever demanded physical delivery. The game was simple. If you wanted to bet on silver going up, you bought a futures contract. When the contract expired, you rolled it to the next month or took cash settlement. You never asked for the actual metal, and the banks counted on this. They sold contracts they could not deliver on, knowing that in a paper system, delivery would never be demanded. It was the perfect crime. Suppress the price with unlimited paper supply while accumulating physical metal at artificially low prices. JP Morgan perfected this scheme. From 2008 to 2016, their traders executed hundreds of thousands of spoofing orders. They would place massive sell orders to crash the price, then cancel them before execution while buying at the bottom they created. In 2020, the CFTC finally acted. JP Morgan paid $920 million in fines, the largest penalty in CFTC history. $311 million in restitution, $172 million in disgorgement, $436 million in civil penalties. 2 of their traders went to prison. Greg Smith, the head gold trader in New York, got 2 years. Michael Nowak, head of the global precious metals desk, got a year and a day. But here is what they did not tell you. The manipulation never stopped. It just changed hands. Today, 22 banks hold short positions on the COMEX. According to official CFTC data from December 2nd, these banks are collectively short 212 million ounces of silver. Let me put that in perspective. The total registered inventory on the COMEX right now is approximately 82 million ounces. The banks are short 2.6 times more silver than actually exists in deliverable form. This is not speculation. This is not conspiracy theory. This is official government data. And it gets worse. According to analyst Faisal Amin, the paper-to-physical ratio in the silver market stands at 356 to 1. For every single ounce of physical silver in the world, there are 356 ounces of paper claims. Let me do that math with you. Global above-ground silver is estimated at roughly 2 billion ounces. Multiply that by 356 and you get 712 billion paper ounces. 712 billion. That is a Ponzi scheme of planetary proportions. For years, this system held together because the music kept playing. But in December 2025, someone turned off the music. Here is what happened. In the 4 trading days leading up to December 27th, buyers on the COMEX did something that almost never happens. They demanded physical delivery, 47.6 million ounces, not cash settlement, not rolling to the next month. Actual metal, and the COMEX vaults hemorrhaged 60% of their registered inventory. The alarm bell started ringing at 8:30 a.m. Eastern on December 28th. That morning, two big-to-fail banks tapped the Federal Reserve's repo facility for $17.25 billion in emergency liquidity. $17 billion in one morning, because someone somewhere could not meet a margin call. The rumors started circulating that afternoon. A major bullion bank had a massive naked short position and could not source physical metal to meet delivery obligations. I cannot confirm which bank, but I can confirm the math. Given the size of the aggregate short position, bullion banks face nearly $200 million in losses for every single dollar. The price of silver increases. When silver went from $71 to $79 in a single day, an 11% move, the losses were catastrophic. But here's where the story gets really interesting. While the COMEX was showing prices around $72 per ounce, dealers in Japan and Dubai were selling physical silver at $130 per ounce. $130, when they could find inventory at all. In Shanghai, physical silver traded above $85. This divergence between paper prices and physical reality has never happened before in modern markets. It is the smoking gun that proves the paper system is broken. Think about what this means. The price you see on your screen is not the real price. It is a fiction maintained by contracts that cannot be delivered. The real price, the price where you can actually acquire physical metal, is 50 to 80% higher, and this gap is widening every day. Let me show you the evidence in the inventory data. In 2020, COMEX registered inventory stood at 346 million ounces. Today, they are down to 82 million. That is a 70% decline. The London Bullion Market Association has lost 40% of its holdings. Shanghai inventories are at their lowest level in a decade. For the first time in modern history, the three largest transparent silver inventories on the planet are all draining at the same time, at record speed. Nearly 1 billion ounces of refined silver have vanished from visible stocks since 2021. Where did it go? Some went to industrial users desperate to secure supply. The solar industry alone consumed 261 million ounces in 2025. Electric vehicles are consuming another 90 million ounces annually, and that number is growing at 3.4% compound annually. Data centers and AI infrastructure are adding to demand we cannot even fully quantify yet. But the industrial story only explains part of the drain. The rest went to people who understand what is happening. Smart money, central banks, billionaires who know the paper system is ending. The BRICS nations alone have accumulated over 6,000 tons of gold since 2020. Between 2022 and 2024, central banks bought more than 1,000 tons of gold per year. That is the longest sustained gold buying period in modern history. Russia and China now conduct 90% of their bilateral trade without dollars. They are not just hedging. They are building a parallel financial system backed by physical metals, not paper promises. And silver is next on their list. When gold becomes too expensive to accumulate quickly, silver is the logical alternative. It has all the monetary properties of gold, plus industrial utility. The smart money knows this. That is why they are quietly accumulating while the paper price is suppressed. And now China has thrown a grenade into the market. Starting January 1st, 2026, new export restrictions on refined silver take effect. Only 44 state-approved companies received authorization to export silver over the next 2 years. These companies control approximately 121 million ounces of annual exports, representing 60 to 70% of all refined silver traded globally. China just put a government gatekeeper in front of the majority of the world's silver supply. Do you understand what this means? The supply deficit that has existed for 5 consecutive years is about to become a supply catastrophe. Global silver demand in 2025 reached 1.24 billion ounces. Total supply, including mining and recycling, was only 1.01 billion. That is a deficit of 230 million ounces in a single year, the equivalent of Mexico's entire annual production. gone. And the accumulated deficit since 2021 now stands at 800 million ounces. Almost one full year of global production has been consumed from inventories. Let me show you what this looks like in real time. Wholesale physical premiums over COMEX spot have jumped from the historical $1 to $2 range to a sustained $6 to $10 per ounce. If you want to buy a 1-ounce Silver Eagle or Britannia coin, you are paying $9 to $12 above spot, up from $3 to $4 earlier this year. Silver lease rates, the cost to borrow physical metal, exploded to 39% in October. 39%. Normal rates are below 1%. Even after moderating, they remain at 11%. This is the market screaming that physical metal cannot be found. Delivery lead times tell the same story. If you want to buy a 1,000-ounce good delivery bar, the standard institutional unit, you are looking at 8 to 14 weeks. The world's largest refiners, Valcombe, Arger Heraeus, Perth Mint, Asahi, Johnson Matthey, are all quoting 10 to 14 weeks for new bars. Normal is 2 to 4 weeks. They cannot make bars fast enough because they cannot get enough raw silver. The LBMA itself, the London Bullion Market Association, issued a statement acknowledging, quote, tightness in the silver market, end quote. Liquidity has all but evaporated. Banks hesitate to quote prices. Traders short on silver are struggling to source physical metal to meet contractual obligations. Ryan Mangan, head of global metals trading at Macquarie, said it plainly. There is a genuine shortage of silver in London, but you have got 500 million ounces sitting in COMEX doing nothing. This paradox of massive inventories immobilized while London's market seizes up illustrates how fragmented and broken the silver market has become. So let me ask you some questions. Where is the silver? Who authorized the exports? Who signed off on the short positions that exceed deliverable inventory by 260%? Who is making margin calls at 8:30 in the morning? Who got the $17 billion from the Fed? Why are there two prices for silver, one on screens and one in the real world? Why is the paper price $72 when you cannot buy physical for less than $130 in some markets? Who is lying to you? And more importantly, why are you just finding this out now? This is not speculation. This is fraud. This is theft. This is manipulation. This is criminality at an institutional scale. This is the systematic suppression of a critical monetary metal to benefit banks at the expense of everyone holding dollars. And now the scheme is unraveling. Not because regulators decided to act, not because justice prevailed, but because physics eventually defeats finance. You cannot create infinite paper claims on a finite physical resource forever. Eventually, someone calls the bluff. In December 2025, they called it. Here is what you need to understand about what happens next. The paper system cannot survive contact with physical reality. For 50 years, they maintained the illusion because almost nobody demanded delivery. But that has changed. Industrial users need metal. They cannot run solar panel factories on paper contracts. They cannot build electric vehicles with futures. They need actual silver. And investors have woken up. The Reddit silver squeeze, the stacking community, the people who understand that paper is a promise and metal is wealth, they are demanding physical. Let me walk you through the timeline of what is coming. In the next 7 days, as Chinese export restrictions bite, premiums will spike another 20 to 30%. Dealers who still have inventory will start suspending sales rather than deplete their stock at current prices. More margin calls will hit banks short on COMEX. Volatility in the futures market will become extreme as the disconnect between paper and physical widens further. In days 7 through 30, the shortage spreads from Asia to Western markets. Refineries will operate at maximum capacity but cannot get enough raw material. The divergence between paper and physical prices becomes impossible to ignore. At least one major dealer declares force majeure, unable to fulfill orders. Mainstream media finally starts covering the story, months after it became obvious to anyone paying attention. In days 30 through 90, the COMEX pricing system loses all credibility. Physical price becomes the only meaningful reference. Silver trades between $150 and $200 per ounce in the real market, regardless of what the futures show. Banks with short positions face losses in the tens of billions. Governments begin discussing intervention, bailouts, possibly confiscation. Beyond 90 days, we enter a new era. Price discovery based on physical reality, not paper fiction. Silver establishes itself alongside gold as a monetary metal and store of value. The gold to silver ratio, currently at 75 to 1, begins normalizing toward the historical 15 to 1 based on geological abundance. Those who held physical metal preserved their wealth. Those who held paper lost everything, and this brings me to you. If you have savings in dollars, you are losing purchasing power every day. The official inflation rate is a lie. Real inflation is double or triple what they report. Your dollars are melting. If you have a 401k full of stocks and bonds, you are holding paper claims on a system that is fracturing. If you own silver ETFs like SLV, I have bad news. JP Morgan is the custodian, the same institution that paid almost $1 billion for manipulating this exact market. They can settle in cash? They probably will. When the system breaks, you get depreciated dollars, not metal. Let me make this concrete. Say you have $10,000 you want to protect. If you buy paper silver at $72 an ounce, you theoretically have 139 ounces on paper. But in reality, you have nothing. You have a claim, a promise, from banks that have already been convicted of fraud in this exact market. Now say you buy physical silver at $90 an ounce, including premiums. You have 111 actual ounces. Metal you can hold, metal that exists. When silver goes to $200, your paper might be worth $28,000 if they actually pay you in metal. More likely, they pay you a fraction in inflated dollars. Your physical is worth $22,200 in any currency, in any country, regardless of what any bank does. Here is what you need to do. And I am going to be direct because your financial future depends on understanding this. First, if you do not own physical silver, buy some now, not tomorrow, not next week. Now, every day you wait, premiums increase. Every day you wait, there is less metal available. Buy coins, buy bars, buy whatever you can get from a reputable dealer. Pay the premium. The premium is the price of reality versus the fantasy on your screen. Second, if you own silver ETFs, sell them. Convert to physical. I do not care if you have to pay capital gains taxes. I do not care if it is inconvenient. Paper silver is not silver. It is a liability on someone else's balance sheet. When the music stops, liabilities get settled in depreciated dollars, not metal. Third, store your metal outside the banking system. A home safe, a private vault, not a bank safe deposit box. When things get bad, governments have historically seized contents of safe deposit boxes. They did it in 1933 with gold. They can do it again. Fourth, subscribe to this channel with notifications on. Not because I want subscribers, because the information war is real. This video will be suppressed. The next one will be suppressed too. The only way you find out about the next major move is if you are notified directly. Now let me tell you what not to do. Do not wait for the price to come down. The paper price might dip as banks desperately try to cover shorts by smashing the futures market. But the physical price will not follow. The disconnect will only widen. Do not trust the system. Do not believe that regulators will protect you. The CFTC knew about manipulation for over a decade before acting, and even then, the fines were a cost of doing business. Do not believe that banks are solvent. They are leveraged to paper positions they cannot deliver on. Do not think you have time. China's export restrictions just went into effect. 44 companies now control 60 to 70% of global refined silver trade. Every week that passes, less metal enters Western markets. The window is not closing in months. It is closing in weeks. The silver market has been manipulated for decades. Prices have been suppressed so banks could accumulate metal while retail investors were told silver was dead money. That era is ending. The physical market has seized up. Inventories are gone. Lease rates are screaming emergency. Premiums are exploding. The paper price and the real price have diverged in ways never before seen. This is not a prediction. This is a description of what has already happened and what is continuing to happen right now as you watch this. The train has left the station. The only question is whether you are on board or standing on the platform, watching it disappear over the horizon. 57% of retail investors now expect silver above $100 by the end of 2026. Bank of America raised their target to 65. Some analysts see 200. The historical gold to silver ratio of 15 to 1 implies a silver price of over $170 at current gold levels. But forget the price targets for a moment. Focus on what silver represents in the broader picture. It is the only money that cannot be printed by a central bank. The only asset that serves dual roles as both monetary reserve and industrial necessity. The only metal where demand is exploding from solar, from EVs, from AI data centers, while supply has been in deficit for 5 consecutive years. The only investment where you can hold the actual physical asset in your own hands, outside the banking system, beyond the reach of central banks and government confiscation. Silver has been money for 5,000 years. It was money before the Roman Empire. It was money when the Spanish built their empire on South American mines. It was money when the United States was founded with the dollar defined as a specific weight of silver. And it will be money again when the current paper experiment finally collapses under the weight of its own contradictions. They lied to you about inflation. They lied to you about the economy. They lied to you about the markets. And they have been lying to you about silver for 50 years. The lie is ending. Not because anyone is choosing to tell the truth, but because the math has finally caught up. You cannot have 356 paper ounces for every physical ounce forever. Eventually, someone demands delivery. In December 2025, they did. The game is over. The crime is exposed. The only question remaining is which side of the trade you are on. Choose wisely. And remember, in the end, if you do not hold it, you do not own it. The silver they told you was worthless is now being fought over by industrial giants, central banks, and informed investors who see what is coming. The silver they suppressed for decades is now commanding premiums that would have been unthinkable a year ago. The silver market they controlled through paper manipulation is now breaking free, forced by the immutable reality that you cannot deliver what you do not have. This is your wake-up call. This is your chance to act before the window closes completely. This is the opportunity that comes once in a generation, when the lies of the financial system are exposed and those who prepared can preserve what they have worked for. The choice is yours. But the clock is ticking, and in this game, there are no second chances.